And no magic keys. No magic key slander.
No That's how he started the class. No magic.
Welcome to master class, man. We're getting slick. This is gonna be a fun class. It's gonna be a good class. It's gonna be us talking about some important stuff, which we talk about all the time. Today's class is going to help you so much in your, which is part of the course too. A lot of this stuff is part of the course, but a lot of this is very, 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 very important for you guys to have and know and understand, right? How to logically utilize technical and fundamental analysis, right? There's 3 words that you should be paying attention to right here, right? First and foremost, I want to say thank you to everyone that's in here, taking the time today. I know we're supposed to start.
Appreciate you guys always.
Started a little late. I was in the gym, got a little late. You know what I mean? It's my first time trying to deal with this time in the gym. So next time we'll be all right, right? So 3 words that we have to pay attention to. Logically, meaning logical, right? Technical and fundamental, right? Technical plus fundamental plus logic equals successful trading, right? You can have all the technicals you want. You can have all the fundamentals you want, right? If you have too much technicals, no fundamental, you're fucked. You have only fundamentals, no technicals, you're fucked. And you're not going to do anything with logic and no technical fundamental. So they all go together, right? You just can't have the technical and fundamental and not try to figure out logically what's happening and how to put those things together, right?
So you can't have a peanut butter and jelly sandwich without jelly. Right, that would just be a peanut butter sandwich. You understand? So I know that's a very grade school type of analogy there, but makes sense, right?
It's better that way. So how to logically utilize technical fundamental analysis, right? So we're gonna go through some stuff that you guys already should know, right? You guys should already know some of these technical situations, right? We're gonna have a little chat about technicals, right? Start with TDA, top-down analysis. Mario, can you explain to me real quick what is TDA, and can you explain to everyone in here what is TDA, please?
So TDA basically is your systematic approach to analyzing your charts, starting from the higher time frame, and then basically sectioning off at the different time frames where your target areas for your trades are at. You're looking for certain market structure, candle patterns. You're looking for certain areas that are going to be areas of interest for your trades for that day, and concentrating on the fact that everything correlates to a previous time frame or a higher time frame, going back both up and down.
That's right. Pretty simple, guys. You're pretty much looking at your chart, right? You're starting at the top and you're working your way down, right? You're starting at the top and you're working your way down, top-down analysis. That's the one and only way that we're going to teach you guys how to approach charting up, right? How to approach marking up your charts and doing technical analysis, right? It's the only way. It's proven. It's proven because we have not 1, not 2, not 3, not 4, not 5 leads who are proving it every day, but we have 6, 7, 8, 9, 10, 11, 12 successful members as well, right? And more and more and more. We're not going to continue to count because we're just going to go down the entire list of people who are using this in the bank zone, right? But it's the only way to approach the markets. You have to look at it from the top down, guys. If not, you might miss something, right? If you only focus on a certain time frame, you're going to miss something, right? So we make sure that we start with our TDA, top-down analysis. And when we do that, usually the first thing that we want to identify is what, Mason?
Well, we want to identify the higher time frame zones. That's the first thing we want to do. And that does that mean that I'm going to start on the monthly or the weekly?
Honestly, you don't have to start on your month. It's a great question, right? Because we
a lot of people ask that.
For the most part, you want to start, if you want to 100% take it top down, then you start on your monthly, right? But we all know the monthly and the weekly if you do a side by side, you can kind of see the similarities, right? You'll see it. So you don't necessarily have to start on the monthly. You can start on the weekly if you prefer, if you like, because the weekly is going to show you everything that you need to know. Either way, right? It's going to show you everything that you need to know, and show you everything that you need to see on the weekly. So you can start on your weekly. The monthly is now we're focusing on more past data, right, or data. When you're looking at your weekly, you can focus more on present data, right, current data. So we usually tend to start on our weekly. We look at our monthlies, we look at our monthly candles, right? We want to see how those candles look. We want to see what type of candle patterns. Was that?
When do you look at the monthly?
I look at the monthly. I mean, I look at the monthly when the month when the month closes.
Not you, because I know we look at it all the time. But if I'm an average trader and it's a monthly candle that I want to look at, shouldn't I look at the monthly one?
Monthly close, monthly open, monthly close, monthly open, monthly close, monthly open, right?
Make it happen. Make it happen. Because a lot of you guys
you definitely
ignoring the higher time frames, and I see the mistakes on the members markup sometimes, thinking that the bias is going to go a certain way. And it doesn't go that way, and then you guys question why. It's because you're not identifying what's the next thing right here. Overall trend. So in order to identify overall trend, you need to be looking at the higher time frames, right? You need to be looking at the higher time frames in order to identify that overall trend, because it's going to give you a lot more data, right? As far as candle movements, right, on the higher time frame. So you have to start at the top, guys. There's no way around it. You have to start at the top, right? So identify your overall trend, right? Now you have a feel for the market. You have a feel for what's happening, right? You've already identified your higher time frame zones, and this is still just your technicals, right? You're just doing your technicals right now. You're charting up. We're charting up right now, right? We are charting up. Go ahead. For you, bro. Not for you. I got a question for Hassan.
What's up?
Are you basing your trade off of the weekly?
No,
Why?
it's too much. Too big of data. Too many pips, too many points in between. My stop loss would be huge. This is going to be off of that. It's going to be off the market structure of that time frame.
Yes, 100%. I know there's a mistake also that when you look at the higher, this is key. When you look at the higher time frames, right?
Yeah.
They, because we're telling you to look at the higher time frames, does not mean that you have to base your trade on the higher time frames as the weekly, right? Or the daily, because it's gonna take long. You're not a swing trader. If you're waiting for a setup on the daily, it's probably going to take a few weeks, right? Just because you hear daily doesn't mean that the trade is going to happen the next day, right? And just because you hear weekly doesn't mean that this double bottom on the weekly is going to complete in a week. There's a confusion there. There's a double bottom on the weekly could be forming for a whole year, straight up. Right. So when we say,
hey, it's funny you said that. My fault. Me and Shy was back testing XPX this weekend, and on the daily, because she likes the higher time frames.
Yeah.
On the daily, that inverted head and shoulders, big double bottom, at the very support at the bottom, we counted it out, right? Like 19 days.
19 days.
You know what I'm saying? And those are
It took about 13 days just to get to the right shoulder.
Yeah.
To the point where we're finally going to break out of resistance.
That's why there's some keywords here, right? When you start with TDA, right? There's certain keywords here. We didn't use it on all points, but if you look at it, there's a certain keyword. Can anybody tell me what the keyword is right here? You see these start with TDA, right? And then there's 4 points, right? 4 bullet points. There's a keyword in there. What's the keyword in there?
Overall trend, my boy.
Overall trend, true, but there's one word. There's one keyword. One keyword.
Higher time frames?
No. One keyword.
One
more. Somebody try it. One more time.
Correlation.
What was that?
Correlation.
No. All right. So look,
because that was
on the top. on the top right here, right? Start with TDA. So the keyword here like I said, we didn't use it for, I'm gonna throw you guys the bone because we didn't put it on all 4 points. But the word here that I'm looking for is identify.
Yes.
All right, identify, because what we're doing on the higher time frames when we're doing these top-down analysis is all we're doing is identifying the higher time frame zones, identifying the overall trend. And if we go to the next point, we're identifying higher time frame patterns and candle formations, right? So that's all we're doing on the higher time frames. We're just identifying them. We're not looking for a trade. We're not looking for entries. We're not looking for the setup on the higher time frame, right? We're just identifying the higher time frames zones, right? We're identifying the overall trends, right? What does that mean?
Trying to understand, trying to take in, and this is where I feel like sometimes when we do top down analysis and we do PDA,
Okay, so not like that he's gonna be like, oh, like it's literally junk. Like there's nothing. 225 pieces.
Okay. 225 pieces of chicken. Listen, man.
Yeah.
Good. You know what I'm saying?
One round all the way around.
Listen, my thing is when we top down analysis, right? The whole point of top down analysis is not top down rushing. It's top down analysis, right? We want to get into the daily. We want to get into the monthly and put down the zones. We're done. We want to get into the weekly. We put down the zones. We're done. The daily zones. We're done. Next thing you know, 10 minutes. I'm like, how did you do top down analysis in 10 minutes? So then that means that you can literally, you can tell me, she took off without me. CP2 smash. This shit. Hey, sorry guys. GM. So it's not about rushing the process. You don't want to rush that process because the chart is telling you a story and you're trying to understand the story, which is why we're using the word identification. You're trying to identify the higher time frame zones, right? You drop to your monthly, you identify your higher time frame zones, and then you look at these zones and understand the behavior of the candlestick formations or the candlesticks within these zones to understand what's happening. Use your replay bar if you want to on TradingView, right? If not, just try to understand what is happening within these zones, right? And then when you find out what the overall trend is, try to understand what that overall trend is. Figure out your dates. How long did this trend last for, right? When did it stop? When did a new trend start, right? It's all about understanding the chart and understanding the story that we're trying to tell you, not trying to rush through the top-down analysis. I promise you, if you take your time and actually understand the candles, it's all in the details. I always say that. By the time you get to the daily, you're gonna have so much information that you're literally gonna know what to do by the time you get to the daily. You guys ever seen Mario's charts on members markup? It seems like he writes a whole bunch of stuff, right? But that's him literally analyzing everything that he sees, that he feels like it's going to help him in edge, right? Have an edge. This is what we're looking for, an edge, right? Because we understand that trading, I always say this all the time, right? And all this is part of the course, but we're just going through it, right? I say this all the time. Every time before we take a trade, we're 50% right beforehand. Because it can only go up and down. You're gonna hit buy or sell, you're 50% right already. There's always there's always bearish and bullish confirmations. You're always just gonna go with the one that has the most confirmations, right? So you have to understand there's possibilities and probabilities so your head can actually be open to the possibilities, right? Not just looking at one side, right? So this is why you have to identify higher time frame patterns and candle formations, right? And then higher time frame QPL identification, right? Can anybody tell me what QPL is?
Not you, Mario.
Quarter point levels.
Who's that?
There we go.
Yep,
you got it.
Let's go. Quarter point levels.
Quarter point levels, very important. You guys know we have a couple of QPologists here in the club, right? Mario being one of them, right? The top one, right? So you have to be able to identify those QPL levels, especially when you're looking at the higher timeframes, because that's when we're going to see these QPL levels come into play the most, right? That's when we'll see those major key levels, because QPL levels are nothing but major support and major resistance, right? Major supply and major demand. That's all a QPL level is. And I mean, it's all psychological as well, right? Hey, you go to the store, right? You want to buy something. and it's $4.38. It's $4.34. Man, you might just drop the $5, right? You might just drop a $5 bill and say, keep the change. It's all psychological. We want those even or flat numbers. We want those QPL numbers. So we have to identify those. And the best way to identify those while we're doing our technicals is on the higher time frames, right? When we're doing our TDAs, you'll see them. They'll be clear for you, and you'll be able to see all the reactions the higher time frame candles have at these QPL levels, because that's when you're really going to see these support and resistance, or the supply and demands, or these QPL levels really. That's when you'll be able to really identify them, because that's when you're going to be able to see the reactions. Yeah, you're going to see the reactions on a higher time frame level. So you have to identify your QPLs. Your QPLs are major keys. You know, Mario talks about them all the time, especially now with his mechanical mindset classes. You're going to see that a lot more. Sean talks about it all the time. We may not speak about it or refer about it as much, but you guys see it when we're dropping our zones, when we're dropping our supports and our resistance. They're still there. They're embedded in our head. QPL levels. QPLs. We say it all the time when we're looking at US 30 and we say, hey, this is going to go to what? 34.5. Right? We don't say it's going to go to 34.563, even though that may be where it wicks on the 1 hour time frame, on the 4 hour time frame. No, we say it's going to what? 34.5 QPL level, right? Because when we switch over to our daily, we switch over to our weekly, that's what you're going to see. That's the zone that's going to that you're going to visually see on your chart stand out. You're going to see the reaction of the market there, right?
And which brings us to, if you really look at it, when you pay attention to your top-down analysis and you find your higher time frame zones, you'll come to see that those zones, if you're finding them correctly, right? And what are zones? The zones needs to make sure that you have many touches in the zone, whether it be support or resistance or supply and demand, right? And for those that don't know, support, demand, resistance, supply, right? Same thing, right? Same thing. And when you find these zones, you'll come to find out that those zones that you're actually looking for in the top-down analysis, then when you find out, like, all right, now I'm going to go look at my QPLs on the higher time frames, you already got it. They're your actual zones if you're actually finding them the correct way. Why? Because that's how these institutions trade. They're not putting orders at $2.38. They're putting orders at $2.50. They're putting orders at $3. They're putting orders at $3.50. $3.25, right? And Sean goes over that a lot, right? Which brings me to time frame correlation, right? We know these are technicals, right? So we know what to do in our technicals. We know the sequence. We're literally giving it to you in the sequence, right? You start at your high time frames, you find out your zones, you figure out your overall trend, understand what's going on, right? Identify your higher time frame patterns and candle formation so you can understand why current price is where it's at right now, right? And then you identify your QPL levels, right? Then it brings me to time frame correlation, right? You drop down to your lower time frames, right? And you evaluate and compare zones, right? Because in reality, we had a whole webinar on time frame correlation, right? And what you're doing here is just literally comparing your higher time frame with your lower time frame, so that way you can get more confirmation based on the same moves, right? It's literally based on the same move. You're going to see a full bullish candle on the daily, and you'll see on the H1 that full bullish candle is actually a double bottom on the H1. You have two confirmations on the actual same move. You have a daily bullish engulfing, which then turns around and is a double bottom on the H1. And then you'll see that it's an H4 Morningstar. That's three different confirmations. I've seen this all the time. That's three different confirmations on the same move. That's time frame correlation. It's just giving you more confluence using your different time frames to understand how price is moving, right? And you're not just based on a higher time frame, because who the hell knows when to get in on a bullish engulfing on the daily? You need to drop to the smaller time frames to understand where you're going to enter, right? If we go back to Twins class last night, what did he say? He focuses on his higher time frames, and then for entries, he's looking for 30-minute, 15-minute, and 5-minute. the same way we all trade, right? That is the way. Pure price action, right? The only difference Twin uses is the SMAs. That's it, because we use the fib, right? Which we already know, right? So you want to use your time frame correlation to compare higher time frames and lower time frames to gain more edge. That's what you're here for, to gain edge. The more edge, I mean edge as in the more confirmations. The more confirmations you have, the more confidence you build within yourself, the more you will be okay with taking that trade, the more you will be okay with your risk management, the more you'll be okay even if you hit stop loss, because you're confident in your trade. That's why Twin can be like, yo, shoot it, boom, stop loss. Shoot it, boom, stop loss. Out of the shit. Shoot it, boom, stop loss. I'm gonna keep shooting until, because I see what I see. And a stop loss is not gonna stop me. It just stops the loss. It's not me.
Stop loss is there to help you. Stop
Yeah.
loss is your friend. You know, we don't like, it's like that good friend that you don't really like seeing too much, but you love him. You know what I'm saying?
He's stopping you.
Especially when you're using proper risk
It's there for
management.
that. You know,
Exactly.
it's there to protect the
You're using proper risk management, you
It
know,
allows you to
stop
do
loss
things
shouldn't
like
bother
that.
you.
Yep,
What was
yep. I said it, especially when you're using your proper risk management, it allows you to do things like that, like Twin does. Because let's say he's risking 5%, 3 hit stop losses, other 2 might hit 5-10%. But why? Because he used proper risk management and is able to do things like that, you know?
Exactly. That's why it's key. That's why we've shown you guys, and you can guys go back to the course. We show you guys how to have there's a whole risk management module in the course that shows you how you can take 10 trades, lose 6 of them, win 4, and still be up. And you're like, how does that? I remember this one time, right? Somebody tried to disrespect me and tell me, Maze is not even that good. Maze is 70% accurate. I said, what? Thank you, bro. I appreciate you. 70% accurate, bro. Like, there's people that are 40% accurate and still profitable, making lots of money, right? Because if you have your risk management in place, you're able to even lose 6 trades out of 10 and win 4, and you still be all right if you use 1 to 3 risk to reward, right? What does 1 to 3 mean? Well, for every $100 I'm risking, I got to make 300, at least 250, right? For every $10 I'm risking, I got to make $30. It's just like that. If you wanted in pips, for every 10 pips I'm risking, I got to make 30 pips. It is just the way, right? 1 to 2 is cool, right? 1 to 2 is cool, but I much rather 1 to 3 or 1 to 2.5 at least, right? Because it allows you to hit 2 or 3 stop losses and then make that back in 1 or 2 trades, right?
Hey, whoever has an FTMO account, bro, that's literally the sauce to pass that shit. 1 to 3. That's all you need. That's literally all you need. A 1 to 3. That's it. That's all you need to get funded.
Facts. Literally, anybody who is trying to pass the FTMO, we have some people that have passed it in the bank zone. We're super proud of you guys. But that's all it is. FTMO, that's all it is. A risk management journey. If you pass, honestly, I did FTMO 2 years ago. I ran up a 25K to 75K. I'm not gonna lie. It literally made me a much better trader for risk management.
Yeah, I was gonna say FTMO really, in all reality, it really just helps you with your risk management, because now this is not, it's pretty much like you're trading someone else's account, right? If you're trading your own account, you know, yeah, you might follow the rules here and there, but you may deviate sometimes because it's your account, it's your money. You know, if you do risk it, the only person that is hurting or rewarding is yourself, right? With the FTMO, you can't deviate, because if you deviate from the plan, right? If you trail the plan, yeah, you're disqualified. Now you just lost that account, right? And nobody wants to lose a 100K account or 50K account or 25K account, 10K account, right? Because you're not following the rules and the parameters that they put in place for you to protect you, right? So FTMO helps you a lot with your risk management, because you have to follow this if you want to pass it, right? But that doesn't mean that's the only way. You should be disciplined enough to be able to do that on your own, right? And that's what separates, you know, the traders, the people who are going to make it, to the ones who don't, right? Because if you're able to discipline yourself on a live account, on your own personal account, man, you got it. Now you got it. You understand? Now you got it. Because now there's nobody forcing you to do it. It's the same as you working somewhere and you having a manager, a supervisor, a boss telling you what to do, right? As opposed to you working for yourself and now you're kind of being lazy, or what's the word Stephen A uses? Lackadaisical. Lackadaisical. You know what I'm saying? You're not taking it as serious because there's no one on your back. There's no one. It pretty much trading is being an adult, right? No one's gonna tell you how to do it, right? Trading your own account. No one's gonna tell you how to do it. I mean, we may tell you how to do it, but you have to follow yourself, right? You have to
apply yourself.
You have to apply yourself. Yeah, that's the only way it's gonna work. And if you don't, that's cool. You could go and deposit some more money, but you're just gonna keep losing money and depositing money, losing money and depositing. It's a vicious cycle.
Bad cycle.
Right?
It's a bad
vicious cycle. So trust me, I've been in the cycle. So I can tell you it's a vicious cycle. So you have to be able to discipline yourself in order to even be successful. So whether it's personal account, FTMO, you have to have that discipline. That's the only way you're gonna be able to get to the profit. That's the only way you're gonna be able to get to the profit, right? But yeah, back to the technicals.
And yes, so that was some good points. To the third point, the last one before our next slide is use bank zone 2 to help you identify reversal areas and corrections and possible entries, right? Which we already know. After this sequence is done, your last bit of edge is your bank zone tool, which is the Fibonacci, right? What's your bank zone tool? What's your bank zone levels? Well, we have the 38.2, we have the 50, we have the 61.8, and we have the 0.75, which is the wick, right? This is our wick entry, right? The key area for me is the 618 and 75, between the 50 and the 75. That's my key area, right? So now you make sure you use this bank zone tool, right, to identify reversal areas and corrections and possible entry, right? So now this is your technicals. We're very clear with it. You guys want to get deep into the technicals, go on the course. You guys already know the course is full of that, right? But this is about how you put the technicals, right? And how you put your fundamentals and your logical thinking together. So what are fundamentals? We already know, we go through it every single morning, New York session, right? Want to make sure that you do your homework, right? One key thing I want to say, fundamentals, you don't just do fundamentals in the morning and then just go over, I got fundamentals done. Fundamentals are all day thing. That does not mean that you have to read all day long. No, but you have to pay attention to your news. Like obviously, if you're going on forexfactory.com, if we're going down to the resources, right? We're forexfactory.com. We have a whole timeline, right? It's very, very key, something that Slick was saying earlier, right? While we was doing this curriculum, which is the next point. And we could talk about it right now because obviously you guys already know the resources. We have investing.com, forexfactory.com, finscreener.com, which is stocks earning calendar, right? Which tells you the earnings of each stock, based on US 30, SPX, NAS 100. And this obviously tell you where the earnings are and then give a boost of confidence for indices to either shoot up or down, depending on, remember, indices are based on stocks, and who controls stocks? Investors, institutions, right? Because those are the guys putting in the money that actually make the price move to where it wants to go, or where they make it go. And we have to follow that, right? Because we don't move the market. We don't have that volume for that, right? We don't trade, $5 million a day and $10 million a day. That's what's moving the market, right? And and marketwatch.com is a very, very good one. But one thing that Slick was saying earlier that I think you should bring up, Slick, is read. Talk about that for a minute, bro, because a lot of people don't do that, and people be like, oh, fuck fundamentals. Excuse my language. Dumb shits don't like, I don't want to look at fundamentals. It's boring. Okay.
Yeah, absolutely.
Something
read,
like
read.
Then you're blindsided and you're like, what the hell? What's going on? Like, you know what I'm saying? Like, for example, if you were in New York session this morning and you saw what happened in GCAD, the moment it hit 10 o'clock, if you're a person that does not think about you being in that trade and you're in the trade, right? And you don't realize that there's fundamentals at that time, right? And you're not risk-free, nothing. Imagine that. Imagine you getting blown out entirely by a bullish candle or bearish candle because you just simply didn't look at fundamentals. And if you look at fundamentals, it doesn't mean that you have to trade it. It could just simply mean that, hey, at 2 o'clock or at 10 o'clock, this is happening. Guess what? If I'm going to trade, I'm going to make sure that I'm risk-free and I took my profit. If I'm thinking about taking a trade, I'm going to wait till after, right? But you wouldn't know if you don't read.
That's right. I mean, being a trader, you got to put it all together, right? Like we said in the beginning, it's not just one thing. You got to put it all together, right? You want a peanut butter and jelly, you got to have peanut butter and you got to have jelly, right? And you got to have bread, right? So you got to put it all together, right? As a wrestler, you need to know all 4 sides of the ring, right? As a basketball player, you need to be familiar with both sides of the court. It is what it is. That's how it is, right? You gotta be well-rounded, right, to be successful in this game. So read. It's not just about knowing the events that are happening. It's not just about understanding, oh, FOMC is today or NFP is today, or you have to actually read, guys. You have to get into it. What is FOMC? What is NFP? What are the rates? How does that change the markets? How does that affect the markets? What type of reaction will we
Google it.
expect?
That's what I used to do.
Yeah, just read, guys. And for the most part, it's all there for you. Most people just don't go into it. And if you saw the course, then you already know. But most people just don't go into it. Even something as simple as forexfactory.com, right? Yeah, absolutely.
Words, bro. What do we do?
Just words. It's nothing but words.
I don't know a word in Forex Factory. What do I do?
You don't know. Yeah. So you go to Forex Factory, man. You see the events. Literally, you see the events. You see the time. People. That's what people do. They look at the events. They see the time. All right. That's it. Listen, guys. Go into the events. Go into it. Click it. Zoom in. Click it. It'll tell you. I'm sorry if you hear my son crying. It'll tell you literally what this event is for, what's happening, what's occurring. It'll tell you what you should expect depending on the numbers that are coming out. And it also tells you what happened the last time the same event happened, right? Because these events are not random events. They happen continuously, right? Some of them happen every month. Some of them happen every couple of weeks. Some of them happen every quarter. Some of them happen once a year. There's different types of events, but the important part is that the information is all right there for us, right? Crude oil inventories. When you click on the little folder, it'll expand. It will actually tell you exactly what this is. It tells you the source, Energy Information Administration, right? Latest release, which is today, right? Measures, changes in the number of barrels of crude oil held in inventory by commercial firms during the past week. Simple. This is what crude oil inventories is. It tells you right there exactly what it is. The change in numbers of barrels of crude oil, right?
Why traders?
Tells you the usual effect. Not saying this is what it's going to be, but usual effect. Actual less than forecast is good for currency. So if the actual is less than the forecast, it's good for that currency. So what does that mean? That means it'll probably push up, right? It'll probably push up USD or oil in this case, right? It even tells you the frequency. Look, released weekly, 4 days after the week ends. Guys, it's all right there for you. It literally tells you the next release. When will we expect this to happen again? I don't know. It's right there, February 2nd. February 2nd, we'll see the next crude oil inventories release, guys. Again, FF notes, whatever FF notes me, or Forex Factory notes, obviously, right? While this is a US indicator, it most affects the loonie due to Canada's sizable energy sector. The loonie, that's CAD. That's just CAD, right? That's CAD, the Canadian dollar. So
look at that.
Again, we always tell you guys, what was the first thing I said this morning when we saw the CAD news? I said, yo, let's go look at oil.
How does he know that?
Correlate. I read. I've seen this happen over and over again. I dig deep. Look, it tells you why traders should care. It tells you what also called crude stocks, crude levels, just in case you're on a platform or broker that has different naming for this, right? And then it tells you where it's coming from, right? The Energy Information Administration. Again, then here on the right, you have the history. You have the history to tell you the last five events of the same exact events. And it'll have related stories for you too. You could go ahead, click on it, look into it, and read the stories if you like, if you really get deep into it. But pretty much the premise of all of this is that all the information is here for us, guys. It's right there for us, guys. So we just have to not only what's the word? All right, we just have to be dedicated enough, right, to take that extra step, that extra mile. And the thing is, you don't have to do it on the fly. You don't have to do it like, oh, FOMC is at 2 p.m. Let me read No, listen, take your time, sit in Forex Factory and just read whenever you get some time. On the subway, home, on a weekly, during the weekends, during your downtime, when you're not trading. Guys, it's all there for us. The information is all there for us, guys. So got to make sure that you're reading it and got to make sure you're understanding what's happening, because we're trading this, right? Harry, you're trading GJ. If something's happening with GBP, if something's happening over with the pound, you want to know.
And
you want to know because you're trading GBP, JPY. So you want to know if something's happening over there with the Japanese yen. You want to know if there's anything that may drive the market, anything that may go against what your bias is, anything that may make the market react. You want to know because you're trading this. And again, this is fun. We have fun trading, but we're not here for fun, right? We're here because this is our bread and butter. This is how we want to get paid, right? So you need to treat it as such and attack all angles. You need to be you need to be so in tune with everything that a stranger could stop you in the street and ask you a random question about GJ or about the British pound, and you're gonna just throw out
how the hell do you know that?
And they're gonna be like, how the hell does this guy know that?
Hey, you don't even live over there.
Yeah, you know but because you're so in tune with the market, right? And that's how dedicated you gotta be if you actually want to, make it over the hump, take it to the next step. When we started really getting into fundamentals, and we're no Mikeys, right? We're no Mikeys, but when we really started getting into fundamentals, we started seeing the market different. That was one of those. I told you guys, I'm pretty sure I said this on the course. I know I said it the first time around. I'm pretty sure I said it the second time around too. If you I forgot what I was gonna say. I'm pretty sure I said it though. Oh yeah, you're gonna have multiple aha moments, right? And that was an aha moment for us when we started like really understanding fundamentals, not just watching fundamentals, but understanding them, right? Aha moments. You're gonna have 1, 2, 3, 4, 5, 6, 7. God willing, you'll continue having aha moments, because all that means is that you continue to level up, right? And that's what we want. We want things to click. We just want to continue.
That's even like this afternoon when the interest rate decisions dropped. Like, okay, we knew that if it stayed the same, it was going to be bullish. Last month when it did it, it was bullish the rest of the week. Every 4-hour candle was bullish. Whether it was wick, it was bullish. It was nothing bearish. All right, for the rest of the week. Today, it blasts because interest rates stayed the same. 5-10 minutes later, when that article dropped about the exact date of March, the first hike, oh, now we got a date on it.
Exactly.
You seen how it reacted, but you had to be paying attention to that because you just would have automatically been thinking like, the buy's gonna keep going, the buy's gonna keep going. That's why I said that message you. I was like, man, they thought they was slick by putting that in there.
And by throwing the date. Yep.
Yeah, we're gonna stay the same, but just the fact, look, get ready for March. People gonna panic already. You telling me in a month, interest rates is about to get hiked up.
And it's that buy the rumor, sell the fact shit. You know what I'm saying?
Exactly.
And it's just to be really honest with you guys, if you're not up on fundamentals and you're not reading what's happening with the fundamentals, honestly, you just not doing your due diligence, right? You're not going to be successful in this consistently, right? Because anyone that tells you they don't look at fundamentals at all is not successful entirely, right? Someone can tell you, I don't pay too much attention to fundamentals, I'm all about technicals. That's cool, but that person's still aware. That person knows, all right, it's NFP today. All right, it's FOMC. All right, he knows the major, you know what I'm saying? That's fine, but the details of it all is literally the main. This is your newspaper. Like, this is your newspaper, right? So if this is your newspaper, then read it and try to understand it. Look, past historic data available to us all. It's all in the internet. And understand the past so that you can prepare for the present moment to look forward for the future, pretty much.
Bars. And we're gonna repeat that in a second, but Sean just said a good point, right? You're playing yourself if you're not in tune with it, because you gotta know your opponent, right? You have to know your opponent. You get in a ring with somebody, you want to know if that guy has a mean right hook, right? So when he throws that mean right hook, you could bob and weave, or you could block it, right? You need to know who your opponent is, and that's the same. And again, I know with these childlike analogies, but it's just very simple when you put it that way, because every day we go to war, right? Like Twin says, we go to war every day with the market.
Yep.
You want to know your opponent, because this market is not playing. This market is coming to take everything you have in your pocket. And I always tell you guys, keep your profit in your pocket, right? And the way to do that is by knowing your opponent and having all angles locked in, right? And that's all it comes down to, having all angles locked in. So, Maze, repeat that. Oh, Sean, good looking, Sean. That was a good one.
I'll say this one more time, guys.
Go ahead. Yeah, repeat that.
Past historic data is available to us all. Understanding the past so that you can prepare for the present moment to look forward to the future. That's what fundamentals are. It's your newspaper. And to be honest, like I said, if you're treating this as a hobby, you're going to make hobby money. If you treat this as a business and treat this serious, you're going to make business money. How do you treat this as a business? Well, it's all in the details, right? So if they tell you do 1, 2, 3, 4, 5, and you only do 1, 2, 3, and then you skip 4 and do 5, and you're trying to figure out, why is my results like this? Why is my results like this? What's going on? What's going on? What's going on? Well, you're skipping 4. There's 5 steps. You don't skip 1, right? And to be honest, I'm gonna say it again. If you treat this like a hobby, you are going to make hobby money. And hobby money is cool. $10, $20, $100. That's cool. I'm not trying to live off $100 a day for the rest of my life if I was you. Right?
You can even make a lot of money, but I promise you'll probably give it right back.
100%.
Because the market is not treating it like a hobby. The market's coming at you like, I want your money. I want you to make mistakes. I want you to not know the fundamentals. I want you to not be on point with your technicals. And even more, if you know a little bit of each, I want you to not think so logically, right? That's what the market wants, all right? So let's not give the market what it wants. I understand the eagerness. I understand the wanting to, right? I understand feeling like, yo, it has to be my time. This has to be my time. I need it to be my time. I understand all of that, guys. This is why the bank zone is as successful. And this is why people talk so highly of the bank zone and us and what we do here in the club, right? Because we've been there recently too. It's relatable. We are relatable to you guys. We relate. And I want you to understand that I'm no different than you. Maze is no different than you. Twin is no different than you, right? Everyone's journey. We all went through it. Everyone's journey. Sean is no different than you. We all went through it.
Even worse. Not to interrupt you, bro. We went through it even worse, which is why we did this club and created this club for you guys, so we can shorten the curve. You know what it is to be taking beatings for years, like years. There's people that we've taught in here that literally came in, and 6 months in, they're already killing shit. Like I wish we had that, right? But no, we had to do it upon ourselves, right? So we had to learn this all ourselves by making the mistakes and knowing, all right, I shouldn't have taken that left on this path. I think I'm gonna, keep going right here, right? And now when we see y'all in the same path, like, hey, don't take that left over there. You might want to take this right and go this way, right? And we shorten the curve for you guys, right?
That's what we're doing, shortening the curve, guys. That's what we're trying to do, at least, because again, we understand. We understand how difficult it is. We understand the eagerness. We understand the necessity, right, of wanting to quit a job, or we understand the need of, I need to make money, or we understand that. We understand.
I gotta pay
bills. But the market is not understanding that. The market does not care about you being eager. The market does not care about you needing to pay bills. The market does not care about any of that. The market just wants to collect your mistakes. The market just wants to
that
collect
again.
your mistakes,
Say that
guys.
again.
The market just wants to collect your mistakes. And the more of it that you make, the more the market is going to continue to collect from you, right?
Mhm.
And I'm telling you, this is why 95, I'll say, maybe even more, 96,
98,
97, 98%
97.
traders, 97 point, like they say 97 point something of traders don't make it, or potential traders, right? Because they never made it, right? They don't make it, right? They just don't make it because it's such a difficult journey. Only the strong will survive. Only the strong will survive. And I don't mean strong like Maze and Jay, who just finished pumping a bunch of iron, right? I'm talking about mentally strong, right? I'm talking about
Talking like Harry.
I'm telling you, like not strong like Harry, right? Well, strong like Harry because Harry's strong up here too. But what I'm trying to say is the market doesn't care, guys. The market doesn't care what the situation is, and you can't expect it to care. Remember, emotionless. You have to be emotionless in the market. You have to be emotionless, right? You can't be attached to anything. You can't need anything. You have to look at the market for what it is, which is candlesticks. Candlesticks, zones, and structure, right? And you have to be able to tie in your technicals and your fundamentals with your logic.
Yep. And it brings us to logic, right? Logic really, really is, to me, is the most important thing in trading. Really, if you really think about it. Trading, when you first start trading, trading is 50% technical, 50% mindset. When you finally learn how to trade, it is 100% mindset. You don't need the technicals no more. You know the technicals. You don't have to learn the technicals. You already know everything there is to know about technicals. Your job on technicals now is to continue to do it repeatedly so that way you can get better, right? Every single day charting up, every single day putting up on your skill set, which is why we always tell you guys should be joining the workshops. Mondays, Pips and Chill with Sean. Thursdays, Members Markup with Mike, right? This is how you get your skill set better. Once you're there, once you can explain a chart and break it down lovely. I know so many people that can break a chart down lovely, and then they just fuck up on trades. Why? Because they're not using their logic. They don't know how to put their technical fundamentals and logical together. Logic is literally, this is where you find your trader's intuition, right? What is trader intuition? Can anybody try to guess what trader intuition is?
It's your secret weapon, man.
Anybody want to give it a shot? What do you think is trader intuition? When you have intuition about something, what does that mean?
There's no wrong
You have
answer.
trust and confidence. You have trust and confidence in your ability to analyze and execute, because you've done it so many times, both physically and mentally, that it's a repetitive concept that you continue to do it exactly like you did it before. And when you see it on the charts, you exactly know, because you've already studied that and made it part of your trading plan.
Absolutely. That is literally perfect. It becomes second nature. Literally becomes second nature. How do you make something become second nature? Well, you practice everything there is to practice and learn everything there is to learn. And then now, once you learn all of that, you caught a feel for doing this. Now you have a feel for doing this. Now it becomes second nature, right? This is all about market sentiment and what mood the market is in for the session, day, and week. How can you know that if you don't view your fundamentals? How can you know what is the market sentiment if you're not going on investing.com every morning or every night before actually waking up in the morning? You should be looking at your fundamentals every night, understanding how the day went by, what is the mood after all the news that came out during that day, and then wake up in the next morning and see if the mood is still the same. Remember, there's futures. Remember, there's London session, right? You have to understand all of these things in the market, right? So that way you can kind of get a market sentiment. What is the mood of the market, right? What is the sentiment of the market? How do investors feel of this market right now, on this market right now? How are they feeling? Bullish? Are they feeling bearish, right? How are they feeling? And you have to go with what they're feeling, because you don't run the market. They run the market. Your job here is to be what was that thing that you said, Mario? FB, what is it?
FBI,
FBI.
You know what I'm saying?
FBI
Forex BS
You know what I'm saying?
investigator.
And Forex BS investigator. So it's like you're trying to
You have to adapt. You have to adapt and adjust. Pretty much, you have to adapt and adjust. We don't walk into the market saying, "Hey, GJ is gonna give us this buy today." No, we walk into the market saying, "Hey, GJ, what are you doing for me today? Right? What are you gonna do for us today? Right? Or not for me. What are you doing today? And how can I adapt and adjust to that? Right? We don't tell the market what it's going to do. We let the market do what it do, and we follow up. We follow the market, right? The market doesn't follow us. We follow the market.
Yep. Which is why you guys want to take words like, I want the market to cancel that. You don't want the market to do anything. I need the market to, the market doesn't give a shit about you. The market doesn't even know you exist, right? You know the market and you know that. So now your job is to make sure that you follow where the market goes. So words like, I want the market to do this, I need the market to do this, that right there will get you in a trend psychologically. And now you're looking things from one perspective. Do you know that the sun doesn't even rise? It doesn't. It's perspective. It's all perspective, literally, right? So if we're looking at things from one perspective, we're not going to see it from the other. We got to literally come out of our shell and understand that this situation is a probabilities and possibilities. And what are you going to do today so that I can adapt and react right away, so that I can take advantage of this opportunity and get out. Not so I can take advantage of this opportunity and then feel like it's going to keep going. Now you're back into I want, and now you're fucked. And this is what happens with people that try to hold trades. Damn, I want a 100 pip move. Why? By the time you caught a 100 pip move and you're waiting, I've already caught way more than that, because you're just waiting for this move to, and market is giving you money and you're not taking it, right? You're looking at things from one perspective. You're supposed to get out of your shell and look at it from both perspectives, because there's only two. There's up and down. There's bearish and bull, right? So you got to get a feel for that. You have to use your logic. This is where you start to use your common sense based on your technicals and current understanding of your fundamental research, right? So you did your technicals.
1 second. Yes.
Homework, right? You did your technicals, right? You're in school. You did your classwork. Cool. Now you're going to go and have your fundamentals, right? You're doing your homework, right? But now you got to go in the game. Now you got to play. How are you going to play it? How are you going to play it? You need common sense for that, right? And I know a lot of people, I understand that the sense that is common is not that common. But we're here in the bank zone, right? So everyone here is here for a reason, right? So, when you start to use this and you start to use your technicals and you start putting your fundamentals together, you want to start to put them together to understand logically, what is this market going to do for me that not for me, but what is it going to do that I can take advantage of, right? And this is where you start to think like an actual bank, like an investor, like a whale investor, like an institution, right? You don't want to think like a retail trader. Just because we're retail traders does not mean that we have to think like retail traders. We don't want to think like that. Right. Retail traders, that's what we are no matter what, because it's either institutions or retail traders. That's it. But we have to put our logic together to understand, how do I put my technical and fundamentals so that I can logically build a correct bias for myself so that I can put some money in my pockets. Simple as that. Instead of thinking like a retail trader, this is where we switch to thinking like a whale investor, institution, or bank, right? Use your logic.
Bank, baby. We the bank. We got to start thinking like the bank. We the bank.
Use your logic, guys. Use your logic. That means use your thinking, use your common sense, use the things that you already know technically. All right, cool. Technically, this is bullish. Fundamentally, this is bullish. All right. Let me now, fundamentally is bullish, technically is bullish. Now, once I'm done with fundamentals, I come back to my technical, I come back to my chart, and I say, how is my bullish fundamental come into play with this bullish technical right here? This is great because now they're both coexisting together. So it's like, how can I logically get into a trade where logically makes sense for me to get in? Because, all right, fundamentals is bullish, technicals is bullish, but when is it going to take off? When, right? You need your common sense for that, right? You need the common sense for that. That's the thing. You have to find a way to be an emotionless, kind of like robotic, but then also have the right balance of having that common sense, right? But not so much where it shoots you in your feet, right? Because when you think too much, then now you're getting off of the second nature situation, and now you're starting to think and look too much, which is why sometimes people that know too much fundamentals get stuck, or people that have too much technical information get stuck, right? There's many patterns.
Man, you gotta be like Bruce Lee, flow like water.
Yep. And it's like, be water. What does he say?
Be
The
water.
cup,
Be water, my friend.
Right? Yeah, the water goes in a bowl, becomes the bowl, right? Adapt to what is, right? And then react. But you need your logical thinking for that, right? Put your fundamentals and technicals together. Once you have that, for example, my technical says bearish, but my fundamentals say bullish. Logical thinking in Maze goes, I'm going to watch this chart for the day. I'm not trading. People will ignore the fundamental, which is fucking important. Look at the technical, and they're both being the opposite, and they're still getting the trade, and then get upset when they get stopped out or lose some money. Sometimes the best thing you could do is do absolutely nothing. Sometimes that is the best thing that you can do, right? Because that just says that you're patient and you're disciplined, right? And the funny thing about that is when you choose to actually sit out and you choose to really tell yourself, I'm comfortable, right? I'm comfortable with sitting this one out and just watching. Pay attention to your thinking when you're doing that, because now you've made a conscious decision to tell yourself, I'm not trading this shit. I'm going to look at this. I'm getting goosebumps because it's crazy. Because when you're in that state of mind, the market literally like blossoms in front of you. Like you start seeing shit you wasn't seeing before. You're like,
and this is gonna sound crazy, right? Because this is another childlike analogy, right? For sure. Not gonna look at me like I'm crazy, right? But we all learned this. Well, maybe not all of us, right? Depending on your age, right? But we all know about it, right? It's kind of like we're role playing right now a famous cartoon that we all either saw or our kids saw, or whatever the case may be, your little brother, your little sister, your cousins, whatever, right? Because all we're doing is what? Collecting clues, right? Once you got all your clues, what do? You sit down in your thinking chair and think.
That's so true though. But it's so true though. It's funny, but it's true. I apologize, guys. My little nephew got my logo crazy. But
that's all we're doing. We're collecting clues, and then you need to think about what you're doing, right? Guys, you know I'm a father, man. You know I'm a father, man. You guys know I'm a father, man. So you gotta think. You gotta collect the clues and then think. Think. You know what I'm saying? Use that. Use what you're learning.
And it's literally like in your face. Like that's what I'm saying. Like when you sit back and you really look at the chart for what it is instead of what you want it to be. Oh my God. When you look at the chart for what it is instead of what you want it to be, I promise you, your brain, your neurons are gonna fucking open up and you're gonna see things that were not there before. Why? Because it's perspective, right? For when the sun is setting on one side, is actually rising on the other. It's perspective. But if you come out of your shell and you look at it from both sides, then things will be that much more clear for you because you're using your logic. If you say, okay, this on the technical is bullish, but this on the fundamental is bearish, I'm going to sit out because I don't like the way that's looking. It's not coexisting correct. Fundamentals are edges, are confirmations too. I don't understand why people don't look at that as confirmation, right? Just like you get confirmations in the chart, right? The best thing to be is when you have bullish confirmation on technicals and bullish confirmation on fundamentals. Like the amount of confidence that you get is like, all right, like sometimes you get even euphoria and you want to shoot it right then and there. And you're like, hold on, wait. You still got to logically think because it's about when, right? Everybody's problem, everybody's situation. We don't have no problems. We all have solutions, right? We all have solutions. So it's like everybody's issue is entries. Damn, I know how the technical. I know it's for my entry because you're not logically thinking. You're not using your common sense. And you're also not listening to the things that you know you should be doing, like waiting for things for confirmations like candles to close, like waiting for your H4, H1, things like that, right? So
Waiting for the retest, for the breakout, you know.
yeah, and that also through logic. That's not confirmations anymore. That's logic. What happens when you have all the confirmations for the technicals and all the confirmations for the fundamentals? You go ahead and shoot it right then and there, right? That's what you do.
Shooter.
You just shoot it right there.
You just shoot it. They just shoot it.
You know what I'm saying? You gotta literally go on your thinking chair. You know what I'm saying? And when you have gathered all these clues, now you're thinking, okay, this is area of interest right here. Is where I can get in. I can possibly see price doing this and that. That's why we can literally on New York session show you guys, all right, this is a possible move right here. This can happen. Or this can happen right here. Okay. And then things end up panning out. We feel like we say this every day. Yeah. Oh, yo, look, it happened just like we said in New York session. And out of 6 moves we call in New York session, 4 of them will happen, 2 of them won't. And it's like 4 of them are winners. We're doing New York session for you guys. There's live signals all the time. New York session, we're viewing a whole bunch of, pairs for you guys that we don't even look at sometimes, just so we can look at it at that moment with our eyes, our expert eyes, right? So that we can show you and guide you the correct way, but the rest is up to you. The rest is up to you. Once you got the confirmations, now you got to think, how am I going to enter? When am I going to enter? With what lot size I'm going to enter? Am I going to over leverage? You shouldn't. I need to make sure that I have my risk match. So many thoughts come in your head. And because so many thoughts come in your head, people go like this with logic. Fuck that. I'm just gonna put a standard lot. Fuck this shit.
I'm just gonna drop. I'm just gonna drop a standard on it. Listen, man, we put ourselves. We put ourselves in the line of fire every single day, guys. We do it for ourselves. We do it for you guys. We put ourselves in the line of fire, right? With confidence, but that confidence wasn't built in a day, right? That confidence wasn't built in a day, just like Rome wasn't built in a day, right? This is just experience, guys. This is just experience. This is us seeing this over and over and over again and living it and experience it in real time, right? For years now. So we put ourselves in the line of fire for you guys each and every single day, understanding that, hey, we've been here before. We know, we understand the markets. We know what's happening. We know how to identify opportunities. So we're going to put ourselves in the line of fire, right? No one's 100% accurate. We're pretty darn good here in the bank zone. I must admit, I've been in groups before,
Oh, I've been in many groups. Let's
been in groups before, many groups, and yeah. I'll tell you, man, it's a doggy dog world out there. You know what I'm saying? So again, no one is 100% accurate. We're pretty darn good here at the bank zone. But we put ourselves in the line of fire for you guys. And again, that's just off of the confidence and experience that we have, right? And we're willing to do that. We're willing to do that for you guys. It's not easy. It's not easy to go. And it's one thing for you to take a trade and it hit stop loss or take profit for yourself. It's another thing to send it out to,
You're responsible for other
hundreds
people's losses.
of different people, you know, and whoever takes this, obviously, you know, but at the end of the day, that's not the goal. The goal for us is always to try and have everyone that steps one foot into TBZ for however long you're in TBZ to become a self-sufficient trader.
That's the
right?
goal.
We want you to be able to identify the markets the way that we identify the markets, identify the patterns the way that we identify the patterns, identify our retracements, our zones, do the proper TDAs, understand the fundamentals, right? Understand how to read and understand how to read and decipher the fundamentals, right? And how to use your logic to tie it in all together, guys. That's our main goal here at the bank. So the goal is not for us to send out 20,000 pips.
It just so happens that that's
what happens sometimes. You know? But that's not our goal. Yeah, that's not our
main goal
at all.
This, you know,
yeah, that's not our goal at all. Our goal is to have you guys, lead you guys in a path of success as a trader, right? And if we can lead you in a path of success as a trader and somehow help you as a entrepreneur, or somehow help you as a person become a better person, or help you, you know, gain knowledge and information on other things, then hey, that's a plus, and that's something that we will forever be humbled by and grateful for, right? But the main goal here is to lead you in a path to become successful, self-sufficient, consistently profitable traders. That's our goal at the bank, so guys. And the only way to get that and attain that goal for us is to have you guys understand how to put
these things,
your technicals,
yep,
your fundamentals,
and your logic.
And the logic.
The logic, honestly, is
twin. You need to buy me a ring, baby. You can't just Zoom propose to me. I need a ring, and you hitting 20K pips on US 30. I need a big rock on that ring. You understand?
Twin, I'm gonna need a porch. Thank you. 9/11. You know what I'm saying? That's what I want. But guys, seriously, man, what is your logic? Be clear on what's common sense, what's your logic in the markets is after you've done your technicals, that's complete. After you've done your fundamentals and that's complete, now you have to sit on your thinking chair, right? And that's gonna be a thing now. Thinking chair.
Hey, bars, we're bringing it back to Blues Clues.
You know what I'm saying?
Oops,
real
not
talk.
Blue Cool.
You know what I'm saying?
So red cool. Nah, that's Lil Wayne. We're not doing Lil
Wayne. So guys, honestly, you know, as we reach the end of the class, to be honest, our goal is to make sure that you guys get this correctly. Again, I know that we hit a lot of pips. I know that's regular. Look, if we really wanted to just focus on hitting pips, right? We would have made a signal group. We would have never had 4 classes a week. We would not be having 5 New York sessions in the morning. We'd just be sending signals to you guys all day, and we'll save a lot of time, and we'll just be calling.
We wouldn't even show face. You know what I mean?
You know what I'm saying? But that's not what we want, right? We want to make sure that we're trying to change people's lives. We're trying to change your lives, right? As we are growing and changing ours too, right? So it just so happens that we're more experienced than the people that are here, and we're helping you guys get there as we're going as well, right? But that's our main goal, to make sure that you guys get this, you know, 100% and just become self-sufficient. Because what good is it if I'm waiting for Twin's call every day for the rest of my life? What happens when Twin says?
I mean, it's pretty good, but you know,
great.
Yeah, right? what happens when?
What happens when Twin says,
decides, you know,
I'm gonna take these US 30 profits. I'm gonna go on vacation. Yo, slick mate, I'm gonna take this quick vacation. You know what I'm saying? I'm vice president. I'm gonna take this quick vacation a month. I'll be back. And then what happens? Right. And then I'm like, all right, yo, me and Slick is just very, very busy running the bank zone. We can't really call.
I mean, listen, Twin works hard, right? He deserves a break. He deserves a vacation. And then nobody gonna stop that man from doing that, right?
I tell him to take the weekends off.
You guys need to be self-sufficient. You got to be ready, right? Because we want you to be able to go ahead and find your own opportunities as well, right? That's what it all comes down to, finding these opportunities as well, right?
There's a different.
We know, twin. We're just using you as an example right now, okay?
What did he say? What did he say?
He said he trades even on a hot tub in the vacation in the mansion. Doesn't matter. So
Shut up, twin.
we know. But the point is,
it's just making sure that you guys are self-sufficient, and the level of comfort and the level of safety that you feel when you know how to do this correctly, and you know you can count on yourself and nobody else, is different. Now you can say, I'm gonna take my trades. Is a US 30 call? Yeah, I'm taking twin signal. Fuck that. Yeah, I'm taking my trade too though, because I know how to trade. You know what I'm saying? And that is the essence of the bank zone. How do we make you a complete, full-blown, self-sufficient trader? How do we make you a better person? Right? How do we make you a business person? How do we make you an entrepreneur? How do we make you a top trader? Whatever you want to be, right? We're pushing you guys to be the best version of yourself. It just so happens that our foundation is Forex, and we use that as a vehicle to start with, right? So become self-sufficient, man. Put these three things together. Make sure that you're actually taking this serious, right? Make sure you're not just looking at charts and that's what you're doing. Make sure you're not, you're looking at your fundamentals and you're understanding and you're breaking down your fundamentals just like you're breaking down your charts, right? And make sure when you have all that, don't rush yourself. It's a process, it's a journey, right? Just like when you have the fundamentals and the technicals, now you got to sit and think and use your logic on how I'm gonna enter, when I'm gonna enter, what risk management I'm gonna have. All that is part of that, right? Which becomes part of your trading plan, right? And when you have all these three things together, I promise you, you're literally gonna have a successful trading career. I promise, right? So thank you guys. Appreciate you guys for showing up tonight. Any questions? I'm open for questions, any at all. This class was based more on, how to put these three things together. Our next class is going to be very, very, very spicy on some charts as well, because I already have a great class in mind, right? We'll be looking at more charts this time, but sometimes it's not about the charts.
Yeah. Someone take twins phone.
Yeah, somebody take twins. Jesus, what is he saying?
Yeah, man. We haven't had our monthly class in a little bit because I think last month with the holidays, we had to skip it, if I'm not mistaken. So, we wanted to come back with one-to-one, right? Conversation, mindset chatter, right? We don't want to jump into the charts. We're on the charts all day, every day, right? New York, we'll be on the charts tomorrow morning, New York session, right? So, we wanted to come direct today, right? So, yeah, any questions, feel free, guys. We're wrapping up, but I just want to make sure everybody, enjoyed the class. Hope everybody caught some gems. It is recorded, so we will be dropping it, but yeah, anybody can speak up.
If everybody understood this class and anybody doesn't have any questions, anybody stood
dry sign,
drop some sevens for me, please, on the chat. If you guys understood this class and resonated with this class and it helped you in some kind of way, drop a 7 in this chat, please, right? Because honestly, this is one of the most important things. And to me, like I always say, trading is 100% mindset. And after you have the technicals ready, literally just 100% mindset, right? So
beautiful.
Lit. This class was recorded. Yes, we get some 7s. That's great. This class was recorded for anyone that couldn't make it. Of course, thank you guys for making it tonight. I deadass just rushed from the gym to make sure I'll make this class, because this class was very, very important to me. I wanted to make sure that you guys all understood this class, and we wanted to make sure that we were as clear as possible, because we're always talking about use your logical thinking, use your common sense, right? So now you guys understand what it is. Logical thinking, common sense is just what comes after your technicals and fundamentals, where you sit on your thinking chair. That's what it is, right? So now we'll see you guys for tomorrow New York session. If you guys have any questions or don't have any questions right now, you guys know where to reach us in the Discord. Thank you guys for showing up tonight. Appreciate you guys.
Appreciate you guys, man. Have a blessed rest of your night.
Guys.
Get some rest. I know it was a very active day today. The markets are still moving, so be very
Like
careful.
2 weeks this week.
Yeah, it's been crazy. So
A lot of
be
pivots.
very careful. Make sure you're keeping your profit in your pocket. Don't get too trigger finger happy, right? It is Wednesday, tomorrow's Thursday, so we pushing over that hump, that midweek hump, right? So we should be expecting some more moves in the market, but we have tomorrow, we have Friday, but we still have a lot of time left, a lot of sessions left. So let's not get too antsy. Let's take it easy. Let's see if late Asian, early London,
not
late
feeling.
London has anything for us in store, right? Because we know we got a lot of movement today. So, and we'll be ready for that. We see anything, I know what we're gonna do. Shoot it.
'Cause I'm definitely sure FOMC is done. Let's get it, man. I'll see you guys tomorrow for New York session, 8:30 in the morning. Thank you guys for showing up. You guys make sure you get some rest. Blessings to you all. Sending you guys some great vibrations. Peace. Love you guys.
Peace out.